South Africa will not participate in the Group of 20 finance track, and that's according to Finance Minister Enoch Godongwana. Speaking to Business Day on the sidelines of a government business breakfast, Godongwana indicated that the country has not been accredited by the US and so cannot attend the meetings. South Africa has had no formal communication confirming its exclusion from the G20, but the accreditation and visa process does allow the US to control access to the event. It comes as the US State Department has publicly announced that SA will be excluded, with Poland invited in its place, a move that South Africa, a founding member of the G20, has condemned. Eskom has struck a stopgap deal with Glencore and Samancor aimed at keeping the country's lost ferrochrome furnaces online. The Memorandum of Understanding comes after months of tense negotiations, with the chrome sector warning that electricity costs were pushing it to the brink. Under the draft plan, Glencore and Samancor will supply coal to Eskom at cost. Eskom will convert it into power and wheel the equivalent electricity back to key furnaces at a lower, more predictable tariff. The move is expected to halve power costs, pause planned retrenchments, and bring almost half of idle furnaces back into operation. Eskom says regulators are processing an interim tariff application, while government works on a longer-term pricing path to stabilize the industry. BHP has secured funding for its Western Australia iron ore inland power network. The diversified mining giant has inked a $2 billion deal with global infrastructure partners. The deal will see the creation of a trust that's 51% owned and controlled by BHP. Global infrastructure partners will hold the remaining 49% stake. BHP says the structure strengthens its balance sheet flexibility and allows it to bring in long-term capital without relinquishing control of critical infrastructure. British American Tobacco says it's still on track to meet its full-year targets and has reaffirmed its 2026 outlook, even as growth is expected at the lower end of guidance. The firm is eyeing annual revenue and profit growth of around 2%. The group says demand for its newer products, led by Velo nicotine pouches, is accelerating, while improved enforcement in the US is helping stabilize VOO's vape volumes. BAT will also return more cash to investors. It's announced a £1.3 billion share buyback for next year, supported by what it calls strong cash generation and a disciplined capital approach. Thungela says it's on track to beat its full-year production guidance, helped by stronger rail performance and the ramp-up of its new South African operations. The miner expects about 13.7 million tons of export coal from SA this year, slightly above target, and says Australia's Insham mine is performing within guidance despite earlier geological setbacks. But Thungela warned that coal prices remain under pressure and says the stronger rand is squeezing export competitiveness. In international news, the US government will allow Nvidia to export its H200 artificial intelligence chips to China, collecting a 25% fee for each chip. Let's take a look at this pack for more detail.
President Donald Trump said Nvidia will be allowed to sell its H200 artificial intelligence chips to China, but at a price. The US government will collect a 25% fee for each chip exported, higher than the 15% floated in August. A White House official says it will be collected as an import tax from Taiwan, where the chips are made, before they undergo US security checks and head to China. Nvidia shares jumped after Trump's announcement on Truth Social, after hours following a thrice earlier on reports of the deal. Trump said he informed Chinese President Xi Jinping about the decision, and Xi responded positively, according to the Post. Trump added that the U.S. Commerce Department is finalizing details of the deal, and the same approach would apply to other AI chip firms such as AMD and Intel. The move appears to settle debate over whether American chip makers should sell to China or hold back to protect U.S. dominance in AI. However, critics in Washington say shipping high-end AI chips to China risks supercharging its military. Democratic senators criticized the decision, calling it a major economic and national security failure. Experts say NVIDIA's H200 is nearly 6 times more powerful than the H20, which is the most advanced chip currently allowed for export to China. But it's still slower than NVIDIA's Blackwell chips, which U.S. firms use for AI training and development.
Meanwhile, the European Commission has launched an antitrust investigation to determine whether Google is violating EU competition laws and how it uses online content from web publishers and YouTube for its AI systems. Let's take a look.
The European Commission has opened an antitrust probe to assess whether Google is breaching EU competition rules. That's in its use of online content from web publishers and YouTube for artificial intelligence purposes. The Commission announced the news on Tuesday. It said the investigation will examine whether Google is distorting competition by imposing unfair conditions on publishers and content creators, or by granting it self-privileged access to such content and placing developers of rival AI models at a disadvantage. The Commission further said it was concerned Google may have used content from web publishers to generate AI-powered services on its search results pages. That's without appropriate compensation to publishers and without offering them the possibility to refuse such use of their content. The Commission added it's also looking at whether Google has used content uploaded to YouTube to train its own AI models, and without offering creators compensation or the possibility to refuse.